G'day everyone and welcome back to another episode of the Aussie Investing Machine. Thanks so much for joining me. In this episode, I wanted to have a look at the company Lynas Rare Earths. I think this is a really interesting company to look at. They've got some really unique competitive advantages which make them a pretty compelling investment. We've also seen a massive jump in their share price over the past few weeks and months. So I wanted to have a look at why that share price is going up so much, talk through all the interesting points about the company and see really what it has going for it and why it might be worthy of your investment. So Lynas itself is a producer of rare earths, and this means it's a collection of elements. We'll get to that in a moment, but essentially they're not very common around the world. Their mining setup is in Western Australia at a site called Mount Weld. They process a lot of what they mine at the moment in Malaysia, but they've got plans to build a processing plant in Kalgoorlie in Perth. So let's jump right into it. The first thing I wanted to do is just have a look at their page on Market Index. As we can see, currently trading at $4.89, up 4% for the day, which is pretty impressive. The 1 year return is over 100%. So if you got into Lynas 12 months ago, you've done exceptionally well. So let's take a look at why that is the case. You can see their price movement and it's pretty healthy in my opinion. We've got a little bit of straight line vertical movement here, which is not always a good indicator. We'll get to the technical indicators a little bit later, but essentially I think this is a pretty healthy price movement and it looks reasonably sustainable over the past year. If we have now a look at the past 5 years, it is a little bit more up and down, and it does look quite steep coming here into 2020. But that's fine, and that's probably due to some of the announcements they've made, and we'll get into that shortly. Having a look down the page, we can see no PE ratio available because they're not profitable. Again, we'll get to that. Short sold percentage is really low, which is a positive. It's not zero, but as you would expect for a company like this, there is a little bit of short selling interest. The overview here, so Lynas Rare Earths is an integrated source of rare earths, meaning that they mine and process from mine to customer, and they've got their assets are in Mount Weld and their advanced materials plant, which is in Malaysia, as I discussed before. Having a little bit of a look further down, we'll get to their investor presentation shortly. I've got that open and we'll go through some of the really key and interesting slides. But moving down, broker consensus, most saying buy at the moment, but I guess that's just a bit of a guide. See a snapshot of the management here. And then if we come down further, we can see the top holders are mostly institutional. Now that's, I guess, reasonably expected. What's their market cap? It's reasonably large. Yeah, 4 billion. So when a company gets this big, we can expect the institutions to be quite well invested in a company. And if an owner, for example, had 25% ownership in Lynas at this point in time, they'd be worth a massive over $1 billion. So we wouldn't expect that at this stage. If we come back down to that ownership chart, we can see, JP Morgan, HSBC, your usual suspects in that top 20 shareholders range. So this is their investor presentation. I'll jump over to the first slide that I think is worth some discussion. So we can see here, this slide is talking a little bit about their capital structure and what they're doing with money that they're raising, pretty much through equity raising. So we can see this $425 million raised, and what they're planning on doing with that is building this Kalgoorlie rare earth processing facility and some upgrades at their Malaysian plant. So the key point there is that they are keeping both in operation, and why the processing of these rare earths is so significant, we'll get to in a moment. I might actually just jump over to this article that I found on small caps. It gives you a bit of a better idea about what are rare earths and what are they used for. So there's a image of a car here, and we're looking at all the rare earths, neodymium, zinchonium, and all these really rare elements, and what components of a car that they're used in. So There's a lot of hype about lithium and battery tech at the moment, lithium graphite as well. And this is sort of the other side of it. A lot of technology uses rare earths, especially magnet technology, which we all know is, yes, a critical part of electric car systems. But there's this whole host of other technologies that rely on rare earths. So that's a little bit about the applications. It talks about the global demand, and the rare earth element market was worth 415 million US, and that's not massive. Now that's in 2017, so obviously this will continue to go up and up, but it's not $1 billion marketplace. So you really need to be quite a key player to leverage or get some leverage in the market and really bring in some revenue. If that's all it's worth, then you need to be a key player. So if we come a bit further down, we can see the split in production. USA used to be, from sort of the 70s to 2000, a producer of rare earths, but China has clearly dominated from sort of that point in 2000 onwards. They are the primary producer of rare earths, and this brings us to a key global issue at the moment, and particularly the reason why Lynas is proving so popular at the moment. We all know the trade tensions that are going on between the US and China at the moment, and really just China and a lot of the Western world, whether it's embargoes, tariffs, these types of things are causing a bit of a nervous trading situation. And as we saw before, a lot of technologies are relying on rare earths to be manufactured. And if the supplier of rare earths is in China, that's a risk to the business. So it's in manufacturers' interests at the moment to diversify their supply chains. And this goes for all kinds of different, I guess, minerals coming out of the earth, but also products and the like. So Lynas is offering to the world a rare earth source outside of China. And I think that is really the key point for this company and why there's been so much interest in it. Now, this small caps article also talks about the obstacles for non-Chinese developments, and it particularly cites the highly toxic process involved with developing and refining these rare earths from when they're mined in the ground into a usable product. It talks about in China there's a toxic lake full of the byproducts of this chemical process, which is used to convert the raw minerals from out of the ground into the rare earths that can be used in manufacturing applications. Now, this clearly would have been prohibitive in Western countries. Governments and communities don't take kindly to a mining process which then uses toxic chemicals and produces toxic waste. So this is certainly a barrier, and it's something that Lynas will have to consider in their investment in Kalgoorlie to make a development centre there. And I know currently that development is under EPA review, but I think given the global situation and provided the right environmental controls are in place, it's going to be critical for that to be approved pretty much for the world in order to have an alternative to the Chinese supply. So we can see here in the Lynas investor presentation, again, similar to that small caps article, they're sort of touting what their rare earths can be used for. They're talking about EVs, green technologies, consumer electronics, and more. And again, it's really reinforcing why these rare earths are so important in a modern manufacturing world. And here on this slide, they're talking about the fact that they're a proven producer. They've been in this game a little while. They're not a new startup. They have customers already, and people know that they produce good quality rare earth product. And we can also see their production cost has been falling over the past 5 years, and that's obviously a positive. I would imagine the Chinese supply rate is quite cost effective for companies, so Lynas needs to be able to match that. So on this slide, it talks about their global footprint and exactly how they're positioning themselves outside of China and around the world in order to complete their processing and what sort of plans they've got in place. So we've talked about the Western Australia Mount Weld mine. That's their main source of the minerals. And then in July 2023, that's their forecast operation date for their Kalgoorlie Rare Earths processing plant. In Malaysia, that's their current processing plant. And this is their main source of revenue at the moment. And we can also see that in the United States, they've signed a contract with the US Department of Defense for another design of a rare earth separation facility. Now that's not processing, but it's part of the process. And obviously the US would have an interest in developing this, especially given their current global position with China. So looking at their main asset, which is Mount Weld, this slide talks about essentially what life is left in the mine. We can see here it's a high grade deposit with 25 plus years left. And obviously further development is going on to try and determine if there's more minerals nearby. So the mining drilling programs are planned in the northwest and south to extend that mine life, and then targeting more drillings. It's sort of ongoing. And I think where there is some minerals, there's probably going to be more. So we all know how resource rich Western Australia is. So I think, already forecast 25 years, I don't think this is going to be an issue for the company going forward. Here's a quick snapshot of their financials, and we can see that 2020 has had some issues for the company. We can see this production halt here as a result of the conditions in 2020. But prior to that, we've seen some reasonably steady growth, which is good. However, in FY 2019, we can see that sales revenue tailing off, which is a little concerning. So we'd like to see a bit of a rebound in sales revenue going into 2021. If they can bring that revenue back up to the point where we can draw a straight line correlation, then yes, I think the company's probably back into the swing of things. And that's the key statistic financially that I'll be looking at to see how their recovery goes. If it sort of flatlines, then it is a bit of a cause for concern. If we're investing in this company as a growth company, then we definitely want to see this trend continuing on the same trajectory or even more so. So that's one to watch and note. So we can see their future pathway in this slide. They talk about what's going to happen in 2023. As we talked about, they've got that Kalgoorlie processing facility is due to start operating, upgrades in Malaysia, but they've got a 2025 vision at Lynas, and that is to meet the global demand for growth, diversify their industrial footprint. We've looked at that facility in the US, Malaysia, and Australia. It gives them some diversity in their operations, and they want to be the supplier of choice, which is a shift from the current supplier of choice or suppliers of choice are in China at the moment. So the capital projects plan we talked about is mainly focused on the upgrades and the development of the new facility in Perth. So that's a snapshot of their future goals and into 2025 and beyond. This is another snapshot on a timeline, which sort of gives you a bit more of a clear idea of where they're going and how the different projects fit in on a timeline. So I think this is a good slide. I like timelines like this. It shows the company is open with investors and giving good set dates and guidelines for their development. And so now we're over here at the Yahoo Finance page looking at the company's price chart. We can see they're currently trading far above their moving average. We've got a huge period of buying or overbought conditions on the MACD with no real end in sight at the moment. So it looks like this price target of $2.50 is a long way off and will probably rise. It might come up to $3. There's no sign of this stock slowing down at the moment. Personally, I think for me, it's a little bit overvalued at the moment. Obviously, do your own research. This is not investment advice. And before making any financial decisions, make sure to go and see a licensed financial advisor. That's my take on where the price is at the moment. I still think the company is a great investment in terms of what they've got behind them and their vision and the product they're producing. It's got a huge moat. I can't find any real competitors. The only other competitors on the ASX are essentially penny stocks, guys who are still in drilling phases. Lynas is producing, they're developing the rare earths, processing them, and they're really in a very, very good global position. And I can't find anyone who sort of matches them in terms of their output and their market position. We know the US has, as I said before, the Department of Defense has engaged with them, and this is a really strong sign. If the US Department of Defense is going to Lynas, it probably means that's their best option. So I think overall really positive signs for the company. Just to wrap things up here, one more slide from their investor presentation. We can see why Lynas is calling themselves the rare earths company of choice. They've got a unique market position, as we just touched on, and they are the world's second largest rare earths producer. I'm tipping the largest is in China. So that's, again, the reason why the Department of Defense has gone with Lynas in terms of getting investment into a processing facility there. And I think overall, strong underlying fundamentals of the company. We did mention their financials need some work. We're looking for that lift in revenue. And if we get that, it's certainly looking like a real powerhouse for the next 5 to 10 years. Well, I hope you enjoyed that summary of Lynas. Really enjoyed making this video, and I think it's a super interesting company and one that will stay firmly on my watch list. Love to hear your thoughts and opinions on Lynas. Drop a comment below. I'd love to know what you think. If you enjoyed the video, give it a like, and don't forget to subscribe to the channel for more content just like this. Thanks so much for joining me, and I'll see you in the next video. Cheers.